We're very pleased with our strong results this quarter. I think it's really pleased to see that our revenues are up 23%. We have managed our costs with a lot of discipline despite wage inflation. I think what's pleasing to see is also the fact that credit risk is very resilient, that we manage non-performing loans really well, and we don't see much deterioration in our books during the course of the second quarter. And all that kind of ties into very strong profitability, strong capital generation. So it's been a good set of results.
It indeed has been. Does that mean that going forward you can build more strength for your balance sheet? Your CET1 ratio coming in at 14.9%. I think the consensus expectation was 14.6% on that parameter. And so you've outperformed there. Yeah. Do you think that you could build more strength from here?
Well, what we have seen is really during the quarter strong profitability that basically increased our capital levels. But not only that, we have been actively managing our risk-weighted assets, managing our capital usage, and these two factors combine to have this strong capital. We are actually in the middle of a share buyback at the moment, which lasts until middle of October. We're doing a €1.5 billion share buyback. And we have indicated to the market that at the end of our third quarter, when we have results, we will give better guidance about any future capital management actions that we may take.
Sir, good morning to you. This is Juliana. How long are NII tailwinds likely to persist, even if rates don't move materially higher from here?
Yes, that's an interesting question. So we do see from the forward curve that rate hikes by the ECB and the Fed are likely to plateau from what we see. But having said that, with the way we manage interest rate within the bank, we have both short-term benefits and something which are locked in for the long-term benefit as well. So while I think the pace of increases in terms of net interest income is likely to slow, we see a good foundation for sustained NII performance going forward.
Let me ask you about the cost front. Last quarter, expenses increased on the back of salary rises and higher marketing expenses. How did you manage on the cost front this quarter, and what kind of guidance can you give us for the second half of the year?
Yes. Well, what we do see is that the pace of wage inflation is starting to slow, from the peak that we see in December, for example. So that pace is coming down, but we have core efficiency programs. As you know, we're one of the most digital banks in Europe. Our digitization program, digitizing our internal back offices, for example, are leading to some of that management of getting costs to be more flat than what we have seen in Q1.
Hi, I'm Joanna Bersecci, and thank you for watching. You can check out more of our videos by clicking on the boxes on the screen. And don't forget to subscribe to our channel for more from CNBC International. Thank you for watching.